If you've been waiting for the perfect time to buy a home in San Jose, this video might be hard to watch, but you absolutely need to see it. I crunched 10 years of actual San Jose real estate appreciation data from 2015 to 2025, and what I find will change how you think about timing the real estate market. We're talking about $1 million in home appreciation over 10 years in neighborhoods like Almaden Valley. That's $8,333 in appreciation per month, $274 every single day. I'm Teresa Wellman with Homeowner Experience Real Estate, and with 21 years of San Jose real estate experience and my engineering background, I don't give options. I give you data-driven real estate analysis. And today's numbers are going to show you exactly what the cost of waiting to buy a house has been for San Jose buyers over the past decade and what it could cost you now in 2026. So stick around until the end because I'm going to give away a free real estate spreadsheet so you can calculate the cost of waiting for your specific situation and budget. So let me start with the numbers that made me create this video. $1 million. That's how much a median home in Almaden Valley appreciated between 2015 and 2025. Let me break that down because these numbers matter. In 2015, the median home price in Almaden Valley was $1.3 million. In 2025, that same home was worth $2.3 million. That's a 77% increase over 10 years. But here's what really hits home when you think about it monthly and daily. That $8,333 per month of appreciation or $274 per day. Think about that. Every day someone waited to buy in Almaden Valley, they essentially lost $274 in equity that they could have been building. And I'm not even counting the principal pay down amount each month on your mortgage. But Almaden Valley wasn't alone. Let me show you what happened across San Jose neighborhoods with respect to real estate appreciation from 2015 to 2025. Willow Glen actually outperformed Almaden. In 2015, the median home price was $1,097,000. And by 2025, it was $2.15 million. That's a total gain of $1,053,000, a 96% increase. That's $8,775 per month or $288 a day. Campbell homes doubled in value from $1,067,500 in 2015 to $2.138 in 2025. A total gain of $1,070,500, a full 100% increase. That's $8,921 per month or $293 a day. These numbers are mind-blowing, right? Even Cambrian, one of our more affordable neighborhoods, saw massive gains from $950,000 in 2015 to $1,856,500 in 2025. That's a $906,500 in appreciation or a 95% increase. That's $7,554 per month or $248 a day. And if you're wondering about the AI boom's impact, look at Cupertino. From $1.8 million in 2015 to $3.45 million in 2025. That's a $1.65 million in appreciation or $13,750 per month, $452 a day. Now, I'm focusing on Almaden Valley, Willow Glen, Campbell, and Cambrian because these represent different price points and different buyer profiles. But I also analyzed Santa Clara, Evergreen, Blossom Valley, South San Jose, and 6 other neighborhoods. If you want to see these complete breakdowns for all the areas, drop a comment for which neighborhood you're most interested in, and I'll cover those in my next video. Now, quick question before we continue. Have you been waiting to buy in San Jose? Drop a comment below and tell me how long you've been waiting. I read every single comment, and I'll give you my honest take on your situation. So now let's talk about the most common reasons people wait to buy and what those delays actually cost using real San Jose market data. So scenario 1, I hear, I'm waiting 6 months to save for a bigger down payment. Let's use our Almaden Valley example. If you waited 6 months from early 2015 to save an extra $10,000 or $20,000 for your down payment, the market appreciated $50,000 in that time. You saved $20,000, the house you wanted went up $50,000, now you're $30,000 behind where you would have been. Scenario number 2, I'm waiting a year for interest rates to drop. I hear this one often, and it's been very common in the last couple of years, especially 2023 and 2024. Rates are high. I'll wait for them to come down is what I hear. Using actual data from 2015 to 2016, Almaden Valley homes appreciated $100,000. If you waited a full year hoping for better rates, you lost $100,000 in appreciation. And here's the thing. Even if rates did drop, that $100,000 in lost equity would require rates to drop significantly just to break even on your monthly payment. Scenario number 3 I hear is I'm waiting 2 years for a market correction. This is the most expensive wait of all. From 2015 to 2017, Almaden Valley homes appreciated $163,000. People waited 2 years for a crash that never came and didn't just miss $163,000 in appreciation. They also watched their buying power erode as they tried to chase a rising market. In Campbell, that 2-year wait cost $282,500 and Willow Glen $203,000. Real example from real data. Let's look at 2017 to 2019. Some buyers thought 2017 was the peak and waited for a correction. Almaden Valley homes did pull back slightly in 2019. They went from 1.463 million to 1.525 million. Wait, that's not a drop. That's still higher. The correction they were waiting for never brought prices below where they were when they started. If you're finding this data eye-opening, I've created a free spreadsheet that helps you calculate what waiting might cost you specifically. I'll share exactly how to get it at the end of this video, so make sure you stick around. And if you're finding this helpful so far, hit that like button. It helps YouTube show this to more San Jose homebuyers who need to see these numbers. Sorry for the brief interruption, but I have a special online event I wanted to invite you to. I'm going live on YouTube on Friday, February 27th at 12:30 p.m. Pacific with a lending expert from BMO, and we're breaking down everything you need to know about the San Jose real estate market right now in the beginning of our busy real estate season. We'll be covering current market trends in San Jose with various pocket neighborhoods included, what's happening with mortgage rates. We'll discuss the data we're talking about in this main video and smart strategies, whether you're buying, selling, or just exploring your options. And here's the best part. We're answering your questions live. So click the link in the description below and add it to your calendar and join us on the 27th. Can't make it live? No problem. Email me your questions ahead of time and we'll make sure to address them during the stream. This is your chance to get real answers from real experts, not guesswork, but data-driven insights to help you make confident decisions. See you Friday the 27th, and comment below if you want to see these live chats on a regular basis. Now, here's my philosophy as both an engineer and a real estate professional with 21 years of experience in this market. Time in the market beats timing the market. Let me say that again. Time in the market beats timing the market. So let me show you what I mean with actual data. But Teresa, what if I buy at the peak? Well, that's a great question. So let's use actual peak buyers as examples. Someone who bought in Almaden Valley in 2018 at what seemed like a peak at 1.65 million, watched their home value drop to 1.525 in 2019. They probably felt terrible, like they'd made a huge mistake. But if they held on, which most everyone does because it's their home, not a stock, by 2025, that home was worth 2.3 million. They still gained $650,000 in equity in 7 years, even buying at what looked like the worst possible time. In Campbell, someone who bought at the 2018 peak of 1.5 million, held through the 2019 dip, ended with 2.139 million in 2025. That's $638,000 gain even from the peak. The data is crystal clear. Your time horizon matters far more than your entry point. Looking at a full 10-year data set, every single neighborhood had positive appreciation. Every single neighborhood had gains of 75% or more over that 10-year period. Even neighborhoods that had mid-period dips ended up significantly higher. The buyers who won weren't the ones who perfectly timed the bottom. Nope. They were the ones who bought when they were ready and held for the long term. I've seen this in my own life. My family has gained over $1.5 million in home appreciation over the last 17 years by buying strategically and holding. That's the power of time in the San Jose real estate market. That's why in my buyer consultations, we don't focus on trying to time the perfect entry point. Instead, we focus on, are you financially ready? Is this the right home for your needs? And can you hold for 5 to 10 years? If the answer is yes to those questions, the data shows that timing becomes far less critical. Want to talk through your specific situation? I offer a free 30-minute buyer Zoom consultation where we can crunch numbers together for your budget, talk about your timeline and neighborhood preferences. The link is in the description below. So what this means for you in 2026. Here's where we apply these lessons to right now in February 2026. San Jose's market in 2026 is being heavily influenced by the AI boom. We're seeing what I call the proximity premium homes near major tech campuses, especially Areas like Cupertino and Mountain View are commanding incredible prices. Looking at our data, Cupertino went up from $1.8 million in 2015 to $3.45 million in 2025. That's a $1.65 million in appreciation, or $13,750 a month, $452 a day. The AI boom has only accelerated this trend in 2026. Current median prices in San Jose neighborhoods as of 2026 are Almaden approximately 2.3 to 2.4 million, Willow Glen approximately 2.1 to 2.2 million, Campbell about 2.1 to 2.2 million, and Cambrian approximately 1.85 to 1.9 million. So the question you need to ask yourself is, based on what we just saw happen from 2015 to 2025, what do we think these neighborhoods will look like in 2035? If the pattern holds and San Jose's tech economy continues driving demand, we're looking at potential similar appreciation trajectories. And a little secret, I've worked with many long-term homeowners who have sold their homes after 40, 50, even 60 years. And the math holds true all the way back then. Home values in San Jose double every 10 years. Let me give you a framework to think about this. If you're considering waiting because rates might drop, run the numbers. Would a 1% rate drop offset $100,000 in appreciation? Usually not. The appreciation eats up any savings from a lower rate. You might think, I want to save more for a down payment. Well, calculate how much the market might appreciate while you're saving. Often you're running backwards. You save $20,000 while the home goes up $50,000, like the example I shared. The market might correct, is what you might think. Well, look at the 2015 to 2025 data. Even in the corrections, there didn't bring prices down significantly to previous levels. If you're planning to hold long-term, those dips, they don't really matter. So when should you wait? Here's where my analytical side kicks in. You should wait if you're not financially stable enough to handle homeownership, or you might need to move in less than 3 to 5 years, or you haven't gone through the proper preparation steps, which is why I teach my 5-phase home buying system. The first phase is research and prepare, making sure you're actually ready, not just anxious about timing. Phase 1, research and prepare. Phase 2, set up your team. Phase 3, narrow down and go home shopping. And phase 4, submitting an offer. Phase 5 is entering escrow, closing, and doing your move. The buyers who succeed aren't the ones who time the market perfectly. They're the ones who work through these phases systematically and are fully prepared. By the way, if you want more data-driven San Jose real estate analysis like this, make sure you're subscribed to this channel. I release new market videos every week. No fluff, just numbers and actionable insights. And which neighborhood's appreciation surprised you most? Comment that below. Almaden Valley, Willow Glen, Campbell, I'd love to know. So here's your action plan and what I want you to do after watching this video. Step 1, download that spreadsheet I've created that helps you model your specific scenario so you can input your target purchase price, your expected appreciation rate based on the neighborhood's historical data, and your time horizon, how long you're considering waiting, and it will show you the projected cost of waiting versus buying. The link is in the description below. Step 2, be honest about your timeline. This isn't about FOMO. It's about making an informed decision. And if you're planning to stay in San Jose for 7 to 10 years or more, the data overwhelmingly supports buying when you're financially ready rather than trying to time the market perfectly. Step 3, get your financial foundation right. Before you do anything, make sure you have a stable income, your debt to income ratio is at a healthy range, and you have reserves beyond your down payment. You also need to understand the true monthly costs of homeownership. Step 4, stop waiting for perfect. The data for 2015 to 2025 is incredibly clear. There was no perfect time. There were just buyers who bought when they were ready and built equity, and buyers who waited for perfect timing and missed out on hundreds of thousands of dollars in appreciation. Even the people who bought at the wrong time, at the peaks, still won if they held for a long time. Let me leave you with this thought. The best time to buy in San Jose was 10 years ago. We just proved that with $1 million in appreciation data, right? But the second best time is when you're financially ready and can hold for the long term. Because here's what the data shows. Over a 10-year period in San Jose real estate, time in the market has beaten trying to time the market every single time. I'm not telling you to rush out and buy something tomorrow. I'm telling you to make a decision based on data, not fear. Based on your readiness, not market timing. Based on your long-term goals, not short-term rate fluctuations. So number 1, check out that spreadsheet below. Number 2, book a free 30-minute buyer consultation. We'll sit down on Zoom and discuss your plans, talk specific numbers together, and look at your budget, your timeline, and your needs so that you can come up with some neighborhood options and create a real plan. This isn't a sales pitch. It's a genuine session where we will look at your situation through my analytical experience lens. Book that at the link just below. And number 3, subscribe to this channel, of course, for more data-driven San Jose market analysis. Hit that subscribe button now. Now, before we close this up, I want to hear from you. What's been holding you back from buying? Is it interest rates, saving for that down payment, waiting for a market correction? Share your situation in the comments below. I read every single comment and I respond to everyone as well. I might even make a video addressing your specific question. Next, watch our video on the 5 phases of the home buying system, where I'll walk you through the exact framework I use with my clients to prepare for home ownership. It's a system that's helped my buyers build wealth even when they bought at the wrong time. That video is linked on the screen right now and down below. And remember, if you want to see a complete breakdown of all the areas I ran data for, drop a comment for which neighborhood you're most interested in. Thanks for watching. I'm Teresa with Homeowner Experience Real Estate. Remember, in San Jose real estate, your time horizon matters more than your timing. See you in the next video.